Okay, good morning everyone. Welcome back. Today we're going to carry on with the higher level production budget questions, and I'm going to focus on the 2008 paper and finish off two parts of it that we had started in the previous videos. Now, just to say, in case you don't have this or you want to have this paper and the marking scheme for it, I've placed them in a folder on Edmodo for you to see. So first of all, just to see where we left off, we did a production budget and we did an actual sales budget as well, even though we weren't asked for it. And we did a raw materials purchases budget, which we noted was like the two raw materials budgets rolled into one that you normally have at the ordinary level. Okay, so today we're going to do the next two parts, Part C and Part D. Part C is a production cost or manufacturing budget. You can give it either name. And Part D is a budgeted trading account. Okay, so we'll start with this production cost or manufacturing budget, and from time to time I've still got the the first few parts that we did in the earlier video, so we'll be referring back to this as well from time to time. Okay, so one last thing to say before we finish, or before we begin rather, is that Part C is in this question, it's always really a production cost manufacturing budget. Part D can be one of two different things. It's not always a budgeted trading account, but for the next while when we're practicing these questions, we'll only do the ones where there is a budgeted trading account. Okay, so first things first, production cost or manufacturing budget. So I'm going to give this call it a production cost, or if you prefer, you can call it a manufacturing budget. Okay, so what's going to be in here is just the total costs, all of the costs or expenses that go into production or manufacturing for the year. Okay, so that's going to be things like your cost of materials, the cost of your labor, the cost of your overheads, and it's going to be, there's two different types of overheads. There's going to be variable overheads and fixed overheads, and we know that variable overheads are things like electricity, which goes up and down. It varies depending on how much you're producing, whereas then there are fixed overheads that will go in as well, and we know the fixed overheads are things like rent, where you pay the same rent for your factory regardless of how many units you produce in your factory, so that cost is fixed. Okay, so let's see how it starts then. The first thing we do is, I suppose, like I said, there are going to be four things in it really: your cost of your materials, your labor, your variable overheads, and your fixed overheads. So the first thing we start with is going to be your materials. Okay, so when we work out the cost of materials, it's very similar to the style of in a trading account where you have the calculation for cost of goods sold, and we'll see that in a second. It's going to be like opening stock plus purchases less closing stock. Okay, and we'll explain why in a moment. So the format, it's going to look like this: opening stock, and since it's the cost of producing stuff, the stock we're going to talk about is stock of raw materials, because that's what goes into producing whatever it is you're producing. So in this question, we've got the raw materials we use are material X and material Y. Okay, so we're going to have two different opening stocks added together: your opening stock of material X and material Y. Okay, it's a bit blurry. Okay, so to find out, I suppose, the cost of material X and material Y's opening stock, they give it to you in the question. We just go here: stocks of raw materials on the 1st of the 1st. That means the start of the year, the 1st of January. So that's your opening stock. Material X is 5,000 kgs at 250 per kg. So we'll put a little workings here. 5,000 by 250. Okay, that comes to 12,500. Okay, now if we look over here, material Y's opening stock was 3,000 kgs at 450 per kg. So 3,000 by 450. And that also comes to, no, that's what, 13,500, isn't it? 13,500. Okay. So your total opening stock is 26,000. Okay. So that's your opening stock. To that we add purchases. And your purchases of raw materials, you just take it from your last part that you did, the raw materials purchases budget. So it's this plus this, and we've already totaled it, so it's 723,930. So 700,930. So adding the two of them together gives me 930. Okay, and then less closing stock. So you can say less or minus if you like, save a bit of space. And again, with the closing stock, there's going to be a closing stock of material X and material Y. So material X, material Y. Okay. And how much you have in closing stock. Again, you've already worked this out because we saw that you had reduced your stocks from what they were at opening levels. So your opening stock in your production budget of where it is, raw materials. Where are we going here? Your opening stock was 5,000, but your closing stock was 4,000. And over here, your opening stock was 3,000 material Y. Your closing stock was 2,400. So closing stock 4,000 by, and your materials were what did I say, 2,400 by. And here's where it's something, I suppose, a little bit different in this question to the ordinary level. If we look at the question again, you have a price per kg for your opening stock, right? That price is the price that you paid for that stock when you bought it. Now, if that's the stock you had in your warehouse at the start of the year, the 1st of January, you bought it last year sometime. And the price you paid for it last year was $2.50 per kg and $4.50 per kg. So that's the price that you must value it at when you put it into this production cost budget. Okay, but the stuff you're going to be left with at the end of the year, well, that closing stock is going to come from the purchases that you bought this year, because when you go and you manufacture in your factory, you're going to use up this stock you had at the start of the year first, and then you're going to use up some of the purchases, and you're going to have some of those purchases left over as closing stock. So what you paid for those purchases during the year is not the same amount that you paid for that opening stock when you bought it last year. It's valued at whatever the price this year is. And as we know, with inflation, things tend to go up every year, year after year. So the expected price for raw materials during 2009 are material X3, material Y5. So we value our closing stock at the amount we paid for it during the year, which is €3 per kg, €5 per kg. And this, I suppose, is because of really the first in, first out that we have talked about earlier in this year. Okay, so multiplying that out gives me 3 4 12,000. 12,000 also, okay. So adding them together gives me 24,000. And since it's less closing stock, I'm going to subtract that 24 from that, and I get 725,930. Okay, and that is your cost of your materials that went into production this year. So just a quick, I suppose, talk about why that's the cost of your materials. Well, first of all, when you went producing stuff this year, you used all of that stock that you had left over from last year. You used that up first. So that 26,000 is definitely part of the cost of the materials that you used for your production or your manufacturing this year. Then you bought a whole load of materials, a load more, so that should also feed into it, except that you didn't use all of this 723,930. You kept some, you had some closing stock, you kept some left over for next year. So you have to subtract that from this real 723,930 of purchases to give you what you actually used during the production process. So that's why we take the opening stock, add the purchases, and then subtract the closing stock to get the actual cost of the material that we used during the production process this year. Okay, so next thing we're going to go on to is your labor cost. So your labor is, let's see, I'll do it here. Your labor cost is, we were dealing with material X and material Y up here. Now we're going to really be dealing with super and supreme, the amount of labor or the cost of the labor in manufacturing all of the supers you were manufacturing, and the cost of the labor that went into manufacturing all of the supremes that you were manufacturing. Okay, so in order to work out the cost of that labor, you must first of all find out how many supers you are manufacturing and how many supremes you are manufacturing, and this will mean going back to your production budget. So if we go back to the production budget here, it says that we were going to, our budgeted production of supers were 9880 and our budgeted production of supremes was 4110. So 9880 4110. Okay, so we were going to produce 9880 supers. Okay, where is our so here it is. So it says for a super it takes 7 hours of labor to make one of them. Okay, 7 hours of labor to make one of them. And then down here it says the skilled labor rate is 13 euros per hour. So 7 hours to make each of them, and we're making 9880, so I must multiply that by 7 to get the total number of hours spent making them. And then for each one of those hours, we pay our employees 13 euros per hour. So I must multiply that by 13. And I've done this earlier. Hold on till I just find the figure for it. It is 899,080. Same goes for supreme. In order to make one supreme, it takes 8 hours. So 4110 multiplied by 8 will give you the total number of hours spent manufacturing supremes. And each one of those hours you pay your workers 13 euros per hour. So if I multiply that by 13, then I get 427,440. And then adding these two together will give you your total labor costs. And that's 1,326,520. Okay. Next thing then is your variable cost. And we said variable cost is stuff like electricity, stuff that varies depending on how much you manufacture. The more you manufacture, the more you pay. The less you manufacture, the less you pay. So electricity, is strictly speaking, is a mixed cost, but we've spoken about mixed, fixed, and variable earlier in the year. So variable, its full title, I suppose, overheads, and again, there were variable overheads in terms of the manufacture of super and in terms of the manufacture of supremes. Okay, and we'll have to do a little working. And again, we'll start off with the fact that we were manufacturing 9880 supers and we were manufacturing 4110 supremes. Okay, and if we go back to the question again, it should give us some information about the variable overheads. And it says production overhead costs are expected to be variable 4 euros per skilled labor hour. Per skilled labor hour. So again, it's saying work out the number of hours first. And then for each one of those hours, our overheads are going to be 4 euros. So it's just like up here, 7 hours to make a super, 8 hours to make a supreme. And then it said 4 euros per skilled hour. Okay. And working that out, hold on, I have that worked somewhere. 276,640. And 131,520. And adding the two of those together gives me 408,160. And that's your total variable overhead costs. And then finally you have your fixed overheads. Things like rent and rates. Okay, and your fixed overheads are usually just one fixed amount that they give you, in this case 204080, 204080. And again, then at the end, it should be, we're adding up our 4 different costs: materials, labor, variable overheads, fixed overheads. And adding the 4 of them together gives me 2,664,690. And we call that again cost of production, production cost. Or you'll see in other solutions, sometimes they use the word manufacturing, cost of manufacture. So cost of production or cost of manufacture is fine.